Some progress which is taking place on the GST, where the revenue neutral rate could be around 18% and this is going to help unorganized sectors such as, say, the ice cream sector and organized players within that. To talk about one specific sector, we have Rajesh Gandhi, the CMD of Vadilal Industries, joining in on the phone line to discuss exactly this. Rajesh, 18% rate on GST, how would that help you?
18% for us also it becomes a revenue neutral. So it will be like we have no cost benefit or cost to the company, but definitely in terms of streamlining the overall structure and smoothing the whole operations will definitely help out the company.
So in terms of cost benefits, you won't have any material impact either on like logistic costs, etc. Nothing of that sort?
No, I don't think logistics cost, because we are already like we don't have that type of effect on logistics because of the GST or VAT either way. So we are paying 15% VAT most of the states and 2% excise. So 17 and other like disallowances in the VAT regime, which will be benefited into the this new regime. So we believe it will be a revenue neutral rate.
Okay. What kind of capex do you have planned for India anyway?
We have not planned right now any capex. The normal 10-15 crore rupees every year you spend. Nothing big has been planned right now. And we have a reasonably good capacity at our disposal right now. So we may not have to spend for another 1.5-2 years big on capex.
Okay. One of the reasons why your stock has been on a tear and has done extremely well this year is because the way your margins have been expanding. In fact, in the quarter gone by, your margins expanded to 12.5% versus 10.9% earlier, and very strong gross margin expansion as well. Do you think this can continue in the second half of the year?
This is a seasonal industry, so like whatever the sales of the first quarter will not be repeated, but definitely we will be better as compared to the previous year same quarter. So there will be a better margin improvement as compared to the corresponding last year, and that we believe that this is one is a growth which is very good. The second is raw material and other material costs are down.
So when you say growth is very good, you did about revenues of 10% in the first half of the year. Will you do better in the second half?
No, we grew by around 15% in totality, which will continue we believe that growth will continue. And second thing is the cost is under control, which also we are believing that which should also continue for another year and a half.
Okay. All right, Rajesh, we leave it on that note. Thanks very much for joining in, but let's keep the GST